Hello, I'm Lotus Smits for the Finance News Network, and joining me from Ausbil is its CEO and Head of Equities, Paul Zouratis. Paul, welcome to FNN.
It's good to be back again.
Ausbil is one of Australia's largest boutique fund managers with more than $10 billion in funds under management. Where are you looking for opportunities at the moment?
Look, we're always looking for opportunities. The market is quite dynamic and it always changes, so there's always opportunities. Right now we have seen a big correction in a number of cyclical stocks, and that's where we are directing our efforts right now.
Now, the Australian share market has continued to climb higher in the first half of this year. Which sectors have contributed to your performance and which have detracted?
Yeah, look, I think that in the first 6 months we have had a bit of a roller coaster ride, as I was saying. The market overall has improved, but where we have added value, particularly in the industrial end, where we've had some pretty good winners there overall. We have given back a little bit in the materials end, but not too much. But overall, we're still well ahead of benchmark.
Now, Ausbil's Australian Active Equity Fund is benchmarked against the S&P ASX 300 Accumulation Index. How did the fund perform relative to the benchmark in the March quarter?
Yeah, we added value. We're up about 110 basis points over and above the benchmark for the quarter. And for year to date, we're running about 500 points, as in financial year to date, 500 points over and above the benchmark.
And Paul, which stocks were your standout performers, and what was your rationale behind entering these positions?
We've been positioned for that cyclical recovery for a period, so therefore a number of those cyclical stocks did perform exceptionally well for us over that period. The likes of Boral was a leading contributor. One of the laggards before, such as Leighton, contributed very strongly for us, particularly given the takeover or partial takeover that was announced during the period. We've made some good money out of retail as well, particularly David Jones, but we've exited that position and we are now underweight retail. But overall, there's been a number of different sectors that have served us well.
And which stocks have you recently built your position in, and why?
One of the stocks that we have been building up over time has been ResMed, which has been a stock which has been out of favour for quite some time. We've built up a nice position there on the view that we think the worst is over as far as its recycling of sales, in the sense compared to previous quarters. And we do believe, relatively speaking, in the healthcare sector, that's one of the most inexpensive stocks in our eyes. We've also been building up a good position in Aristocrat. Again, this is a stock that we held some years ago. We have rebuilt our position. We do believe that the outlook for that stock is very promising, particularly given that its competitors are actually suffering a bit, and Aristocrat is certainly performing well against them.
US fund manager New York Life Investments acquired Dexia's interest in Ausbil in February this year. How has the transaction impacted your Australian operations?
Oh, look, it's been fantastic, I must say. This has been in the making for quite some time, and so we're really pleased to get an organisation such as New York Life onto our register. They've proven to be nothing short of excellent. It's been our experience since we've been associated with them. I mean, we see a lot of benefits that we can gain from them and vice versa.
And Paul, how do you expect to benefit from the backing of one of America's largest asset management firms?
There's some soft benefits, but there's also some great other benefits as well. When I mean soft, I mean the sense that we can draw on their experience internationally. We can also draw on their capabilities, which can actually also supplement our process and also our business here in Australia. We can use them as a distribution arm as well, which is clear, and that's one of the key objectives that we have internally. But also when we're looking to establish some new products, and if they do stack up well, which we think they will, we have a source of funding from New York Life, which we didn't have before from Dexia.
New York Life Investments has a number of boutique offerings. Which may Ausbil consider introducing into the Australian market?
We've identified 2 or 3 at this early stage, and we are doing some further work on that, but clearly be more from an international bent, offering some of their products to the Australian public and also to the investing universe here overall. We think fixed income is also another big area there, which they have some very strong capabilities, so we'll be looking to develop and offering those capabilities here in Australia as well for them.
Finally, Paul, US and local share markets are at post-GFC record highs. Are the gains sustainable, and where do you see the S&P ASX 200 index ending this year?
Look, we still remain very positive towards equities. Part of the reason is that global growth continues to recover, and that's normally a very good backdrop for equities. Our view is that here in Australia, things are slowly but surely on the improve, and earnings will eventually recover as well, which will drive the market higher. We think the market presently around 5,400, 5,500 will trade around the 5,800 by year end, is our view, based on improving earnings.
Paul Zaradis, thank you for the update from Ausbil.
Not a problem, thank you.